Hi, I'm Delisa with Watch Your Figures. Welcome. I'm going to show you how to buy and sell stocks from beginning to end. And when I say beginning to end, I mean everything from opening up your brokerage account to actually going to the live market to buy and sell stocks. It's going to be done in 4 parts. The first part is where you're at now, opening up your brokerage account. The second part would be stock market terminology. And the reason you need to know that is because if you go into the stock market thinking all I got to do is to buy, sell, and sell, and you don't know anything else, you're not really doing due diligence and you may make some mistakes. So it's good to know your stock market terminology. So when they start saying we have a bear market or a bull market, or they start asking if you want to do a market buy, limit buy, stop loss, you're going to need to know what all those things mean. So that's stock market terminology. The third part would be opening up a stock market portfolio. And what that does, it's a free service. Like you can do it anywhere. I use Yahoo Finance, and it's like a basket where you can hold all your stocks. For example, if you're looking at, like 10, 12 stocks that you want to do research on, but you want to see how they're doing in a real-time market, Yahoo Finance will keep up with what they're doing in the real-time market. It'll be in your portfolio. You can watch it. You can say, oh, I want to buy Alibaba or whatever, right? And then you can put that in your portfolio, look at it for a while. And this is where, I would do like my research and everything. I would have it in my stock portfolio. So even if I didn't buy it, it's there. I can see how it's doing in the market to know whether or not and when or if I want to actually place a trade. It's also a good place where you can do all of your research. It will tell you what the CFO, they'll tell you about insider trading. They'll tell you comments that people have. They'll give you all the prices and everything they've had since they first came in an IPO. And what an IPO is, it's an initial public offering. For me, like if I were to give you any tips on, what stocks to buy, whatever, look at things that are like going through FDA process, like your pharmaceuticals. Look at IPOs and see if you think they have good potential where you go ahead and get in early, right? The same thing that people did back when, Apple went public and Google went public, right? When Amazon went public, Facebook public, right? You get in early, you may be sitting on a good nest egg. So it's good to look at IPOs. Now, the reason that we're going to go over that in detail is because that's where you're going to do your most research. That's where you're going to see the real-time market. That's where you're going to know your best decision to make for you, for your stock market portfolio to prosper. That's why we're here, right? To make some money. So having your stock market portfolio is a good thing to have. And it's also good like a little basket. For example, you might be just driving home and you see a billboard about a company. You're like, you know what? I like that company. Or you go to the grocery store and you see like products that you buy all the time. Like, why do I not just get stock in that, right? But you don't really know anything about it. So you just come home, you put that in your stock, add that to your stock portfolio, and you just start watching it. And then you do like some research on it. And then you may say, I think I came up with something good here, right? And I can pull the trigger. Yeah, so that's that part. And the last part would actually go into a live market to buy and sell. So with buying and selling, I'm going to take you through buying and selling stocks in the real-time market. I'm going to do a market buy and a market sell. I'm also going to do a limit buy and a limit sell, walk you through that process and show you how to get into the market and how to start monitoring and start making money from your stocks. The first part, opening up your brokerage account. You need to do this first. The reason is, say we have a day like today where the market is just tanking, right? We've had 3-day losing streak and I've been trading options. So sometimes I've been doing good and sometimes I've been hurting, right? Because, it's so unpredictable right now. But for others, it's a good time to get in. It's called buying at the dip. So let's say today you decide, hey, I want to go ahead and open up a brokerage account and I want to go ahead and buy my first stock because they're really, really cheap right now. Hold on, you can't do that right now. You know why? Because it normally takes like 2 or 3 business days for your money to settle once you fund your account. So let's just say it's 2 p.m. and you're like, you know what? Oh my God, I want to go ahead and buy Apple. I want to go ahead and buy Google. It's really, really low, right? And you didn't have your brokerage account already open and funded, you cannot trade. You have to wait 2 or 3 business days. And guess what? The market fluctuates so much, it may not even be that price anymore 2 or 3 days later. So you kind of missed the boat. So what you want to do is open up your brokerage account first. Now, there are so many different brokerage accounts you can use. The brokerage is sort of like the bookie. They're the middlemen between you, Wall Street, New York Stock Exchange, NASDAQ, and Dow, everything else, right? So you must have a brokerage account. There are so many to choose from. So what I'm going to do is kind of give you you'll see the next few slides coming And they're just going to show you different types of services you can use. And that way you can go ahead and do your own due diligence to find out which one works best for you. Important things to look at though is what their commission is going to be, what their minimum funding for your account is going to be. Some are 0, some are 500, some are 2,500, some are 5,000, some are even higher. So look at what the minimum amount that you would need to fund your account to get started based on your budget and what you want to trade. The third thing you want to look at too are fractional shares. Because for example, say you want to buy something and it costs $3,000 a share. And you're like, I know this is a really good company and I want a piece of it, right? But the brokerage firm you have don't offer fractional shares. Guess what? You can't afford to buy that stock. But if you did choose one that does have fractional shares, you can say, hey, I just want a piece of it. So you can say, okay, it's $3,000. I want to invest $500 or I want to invest $1,000. They'll give you fractional shares of that stock. So you still have it, not a whole one, but you're in. Same thing with me with Bitcoin. It's like Bitcoin was going so fast. I'm like, okay, you know what? I don't really want this, but I don't want to miss out. So, I went and bought some fractional shares. I said, okay, I'll just go ahead and spend a few $1,000s and just get fractional shares. I was not about to spend $100,000 on a coin. I did want a piece of it just in case. Now for me, I use E-Trade for like my options trading and to hold some stocks. I also use Ameritrade to hold some stocks and if I want to trade. I also use Robinhood. I normally use Robinhood for crypto. That's pretty much it. And let's say you're a veteran. If you're a veteran, you have all these other brokerage accounts and brokerage services, but you can also use Navy Federal if you have a Navy Federal account. Navy Federal has brokerage services and it's easy and simple because since I am a veteran, I'm a retiree, I do use Navy Federal to buy and sell my stocks because it's easy. I just say, hey, I want to buy $500 worth of this stock, transfer from my checkings account to my brokerage account, boom, it's done, right? And I can go ahead and trade right away. And same thing is if I want to take the money out, say I made a profit, I'm like, I want to use some of my money. I want to take some of my profit out. I can easily make a withdrawal from my brokerage account in Navy Federal and transfer it back to my checkings or whatever account it came from. The same thing happens with all the other brokerage accounts too. You can go ahead and deposit, you can go ahead and withdraw. The most important thing to know is that it is taxed. If you don't have it like in your, it depends on which type of account you have because you have IRAs, right? You have traditional and you have Roth. If you don't know the difference between the two, your Roth IRA is already taxed. So say you have money going into your Roth IRA. When you withdraw that money, you don't have to worry about taxes. It's already been taxed. Now, if you have a traditional IRA, that money can sit there and accumulate and accumulate and accumulate. They won't bother you. But when you go to withdraw it, they are going to tax you on that money at that current rate. So you have to decide whether it's best to do a Roth because a Roth is taxed today. Or if you decide to do a traditional, when you may take it out in 10, 20 years, and then you have that tax rate, right? So you have to do, they can both work depending on your circumstance. If you just have a brokerage account, just for individual trading, like I'm using, then you don't have to worry about, your Roth or whatever, but you will be taxed on that money because that is additional income. And also when you do your taxes or whatever, it can still be a loss. So, and they'll send you a 1099. So they're going to send it to IRS, say, hey, she made this money or he made this money, or they're going to send it on the 1099. So it's time to do your taxes. So it's best to know that whatever you take out and withdraw, you're going to be taxed on that amount. Okay? Okay, there's no way for me to actually go over every type of brokerage service and walk you through each one. But what I will do is go over some things they may ask you that you may not be familiar with, just in case you need help with that. You already know your name. You already know you're going to create your password. You already know you're going to create your account. You already know where you work. You already know what your net income. You already know all of this, right? So let's just go over the things you may not know. The first thing is, what type of account are you opening up? Now, you can have an individual account. It's just you, right? And then you go ahead and put in all your information. You can also have a joint account with you, your spouse, or whatever, right? You can have a joint account. The next one is your retirement account. That's what we were talking about, like your IRAs and your Roth, your traditional stuff like that. And then also you have your custodial account. Let's say to me, like I'm 58 years old right now, and my kids are grown. Now with a custodial account, if I can do things all over again, I would have had a custodial account for them when they were young. I mean, like just coming out the womb young, 1, 2, 3, 4, 5. I would have had a custodial account open for them, and I would have been buying like little cheap stocks, like things that are like $20 or $30 or $50, or maybe something, because during their time when they were children, Facebook came out with an IPO, which is an initial public offering. Whenever you hear of an IPO, that's just initial public offering. That's now when a new company is going to go on market, right? And they're going to offer their stocks to the public, right? So when Facebook first came out, my kids were young. I should have gotten Facebook when it first came out. I'm kicking myself now because when they first came out, they were only like $26 a share. And now they're, almost $700 a share, right? So even if you think about it in those terms, having custodial accounts, even if you're not going to do this for yourself, open an account for maybe your children, or maybe your nieces and nephews, or maybe your grandchildren, right? And just put buy little stocks or whatever in there. And then when they turn 18, guess what? They probably be worth more than you. And so I didn't do that, but I did start doing that when they got to their teens, right? And then I also taught them how to buy and sell stocks, and also how to trade options and day trade. And my middle son is pretty good at it, right? But he has a lot of discipline. I don't have discipline, right? But anyway, long story short is it's really, really good. I love to have a custodial account. Another reason why I like custodial accounts is, I don't know your background, but I know for me, it's like, I come from a community where no one really saved for you in the future. It was like once you turn 18, you're pretty much on your own and you got to figure it out. So it'd be good even if you really can't afford much, to buy like little stocks for your kids, so that when they do turn 18, they're going to college or whatever, they have a foundation. It's like turning the tides. It's like changing your dynamics by doing things a little bit different, where we actually have a foundation and our kids actually have something they can stand on before they go out there in the world on their own. It's also good to show them the importance of money and investing in themselves instead of investing in corporations or in stores, right? Just get material things that it will weigh away. So it really, 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 it does benefit to do a custodial account for younger members under 18 years old. Now, the first thing you will see is like your annual net income. And basically all that is your gross income minus all your deductions, which would leave you with your net, right? Put that in there. Okay, now your net worth is everything you own minus everything you owe. That will give you your net worth, which tells you like a good financial picture of where you're at. Like you can't have a negative net worth. You can't okay, you know what? Everything I own is worth $1 million, but everything I owe is $1.5 million. So yes, you can have a negative net worth, right? Liquid net worth is different. That's the amount of cash you can just scoop up like right now and get the skedaddling, right? For example, you want to leave the country right now, and then you want to take all your liquid net worth. That's everything that you can get in cash, like cash, your savings account, your checkings account, your money market account, your stocks, your mutual funds, your bonds, even like watches or jewelry or whatever. Anything you can quickly sell and get cash for. Anything you can get cash for, that amount of cash is your liquid net worth. Okay, when you start opening up your account for to do stock buying and selling, you can also have options trading where you can go ahead and do that. You can also have futures trading. There are different things you can do inside of your brokerage account. It's sometimes based on your experience though. Like for example, my daughter opened up her first brokerage account when she turned 18, 19. And then she put all of her experience in. One, she had, I think it was Interactive Brokers or whatever, they gave her an actual test to see if she had experience with, like options and futures or whatever, right? But for her, they went by her experience. So the following, when her account was funded and we came back, it said, yeah, she's approved to go ahead and buy and sell stocks, but she's not approved to do any options trading. Even though I was teaching her how to do that, I wanted her to do that on her own. They wouldn't allow her to do that based on her experience. So be wary of that. And as far as stocks, if you don't have any experience with stocks, which I'm sure that's why you're here, don't worry about that. You should be able to trade stocks. We're talking about experience when it comes to futures and options and stuff like that. Now, they're going to have this in every brokerage. They're going to ask you this question about the regulatory information. And basically, it's trying to make sure that you don't have any relatives or any stake into publicly trading companies. So they're just asking you those questions. I'm not sure if you get penalized for any of this, but they're going to ask you if you have any affiliation with publicly traded companies. So you can answer those questions as it fits you. And with that, you're going to also have all of these agreements and disclosures that you have to sign, because you have to realize when you go into the stock market, now you're dealing with IRS, now you're dealing with the SEC. So you want to make sure you're using your correct name, your correct social, you're opening up the correct account, because now you're attached legally to, IRS and the SEC regulations. And then you have your IRS section also. They're basically asking you if you're subject to any backup withholdings. So answer as it fits you. Now we've come to the end of this. It should be really short and sweet. If you have any questions also, I will leave my email. Email me. If it's anything that you need throughout this whole process or whatever, just go ahead and email me and I'll try to get back to you as soon as possible. So thank you for watching this section for those who needed this, and can't wait to see you for part 2, stock market terminology.